Okay. I'll admit it. For the past few months, when it comes to GTA home buyers, I have sounded a bit like a broken record, so forgive me. It's just that with record high inventories back from the month of May till now, the middle of October, I've kind of had the same thing to say to buyers: get on with it. And so I always ask kind of the same question, but I thought this time, what if I have somebody else, maybe more important than myself, ask you the same question? Because sometimes the same thing from a different person sounds a little bit different. So here goes.
With inflation down to 1.6% and almost certain 0.5% rate cut coming in the next week, what exactly do you think will happen in the market?
And that's my 10-year-old son asking you, the home buyer, a very important question, one that I've asked in the past little while. So listen, let's get on with this. Beautiful people, it is me, Andrew the Realtor. Thank you very much for watching these things. I appreciate the feedback. I appreciate the views. So this month, an important month, because I'm one day removed from the amazing announcement of the huge inflation numbers announcement, which showed a drop from 2% to 1.6%. Before that, I think it was 2.4. So I'll show that shortly. I'll tell you what it means for the interest rates update coming next week for us here in the middle of October, and what that's going to mean for the real estate market. So listen, the market is already picking up. With more activity to come after another inevitable drop in interest rates this month, which is going to happen on the 23rd of October. For some of you watching this a little bit later, it's already happened. I'm guessing 0.5, but I'll tell you why. So freehold single family is going to go first in terms of the market starting to pick up, and it already has. And then condos are lagging a little bit behind. They are selling. They are selling, by the way, but not as fast as that. So that tends to be how it goes when a market like this changes due to interest rate drops or something like that. So you have sellers. Pay attention. Very, very important. I've had some great success just recently. I had a neighbor call me because their house had not sold previously, and I sold a house just down the street for a pretty fast time, in a fast time, and for a really, really good price. Sellers, pay attention, please. I'm going to have some good information here. So buyers, you're slowly running out of time. Listen, this isn't clickbait. I'm not saying it's going to be just seller's market all the way through. Absolutely not. But the golden window, that amazing magic window, where you could pretty much do whatever you wanted, almost. That ran out about 2-3 weeks ago. So towards the end of September, that's kind of when it started really picking up in terms of activity, which means buyers have more competition. Still, let that discourage you. In fact, this whole video is about to encourage people to get into the market, and I'm sure sellers will appreciate it. If you're not selling or buying at all, you're just a homeowner who happened to pop on this thing, maybe you're not interested in the market, stop for a second. I got something for you. Go to the end. You can fast forward to the market update. Go to the last probably 4 or 5 slides of this presentation. I'm going to have something very important for you, homeowners, especially ones in Toronto, just for you. It has nothing to do with selling or anything. In fact, one has to do with refinancing, if that's you. So moving right along. This is, of course, a market update that I do every month. Guys, it's entirely and totally to provide you valuable information. I get nothing for it. I'm obviously not some YouTuber. Look how many views I'm getting. I'm not Mr. Beast, like I always say. That QR code over there takes you to the website, askandrew.realtor. There's a bunch of information there if you need a good lawyer, good mortgage broker that I personally pick. And I say personally because they do my own stuff, hence I have to trust them. And I do trust them. They're amazing people. And of course, if you guys have any interest, if you like it, hit like and subscribe. But listen, if you need something, if you have just a question, give me a shout. You can find all my information, askandrew.realtor, or it's going to be below in the description of the video. So moving right along, guys, I appreciate your attention, so I'm going to keep moving here. Let me minimize myself. This was the big announcement, and honestly, I didn't know it was going to be this much. I didn't know the drop was going to be this much. So former Bank of Canada official policies jumbo rate cut in October. Jumbo rate cut. So this is the pattern. This is what we're looking at here. I would really bet on a 50 basis points. This is a gentleman who's a previous, ex-deputy governor. So we were flip-flopping between 0.25 or zero point 0.5 in terms of the drop in interest rates on October 23rd. The way things are looking with the inflation now, it's a lot more likely that it's going to be 50. And notice the dates. October 7th was the first one over on the left, and on the right you see October 11th shortly afterwards. They're still kind of flip-flopping, but listen, we're a few days past that, and this is what happened. Look at the green circle there. That's inflation. Now, admittedly, yes, it has to do with gas prices this time of the year versus 2023 this time of the year versus in 2023. But this is a huge difference. And as you might know, 2% is kind of the part in the mark they shoot for. We're well under it. Look at the red. That's 8.1% inflation. That's the highest absolute peak in the middle of 2022. And of course, February of 2021 was the last time we had anything remotely like this. And remember, February of 2021, that was still during heavy COVID times. So this is pretty amazing. in general. And what do you think is going to happen with interest rates? And what's this cascading effect that all that's going to have? Again, you might have to answer that question my son asked earlier. So, moving along. This is what's happening in the actual market. So I'm going to move myself, make sure you guys have plenty of space. Forgive me if it's too much. I'm always concerned about that. But listen, look at the left. That's September last month versus September 2023. The difference in sales is significantly higher this year. Now, admittedly, full disclosure, September of last year, 2023, wasn't particularly busy. It had sales, but it wasn't particularly busy. We've had normal market sales of 7,000 to 8,000 sometimes 6,000. And of course, at that time we had 4,600, significantly lower. But we're at 5,000 last month, and that's pretty good. And it's increasing, considering how things have been lagging behind. But average price, notice average price, we're down 1% on average, which is nothing. Year over year. So in 1 year, we lost 1% on average. And some areas have actually gained, some areas have lost a little bit more. The point being, the market is not affected that much in terms of the price. What has been incredibly different, as I've been talking about for the past few months on these, is the red circle there on the left, active listings. Notice we had in September, we hovered between over 26 to about middle of 25,000 active listings on the Toronto Real Estate Board. This time last year, or September of last year, it was 19,000 or just under 19,000. That's a huge difference. I mean, 35%. Depending on what area, 30-40% higher inventory. Again, buyers, you have so much opportunity. Anyway, I don't want to get too much into that. Days on market, of course, same thing, 43 versus 50. It's a little bit, it's obviously higher than September of last year, but it's only a little bit, actually a little bit lower than the previous month, which I would ask you look at the right and look at the active listings versus September versus August of this year. So we, of course, increase inventory. That's normal from August to September because the fall market begins in September. And, of course, look at the days on market. Interesting, a little bit lower, not a huge difference, but it's very interesting. Listen, as an agent that actually has listings out there and knows very, very busy realtors, some of them in the top 100 of the board. Reason I mentioned that why I know them, first of all, they're wonderful people. Two, they have a lot of listings and they're very good to talk to, asking, hey, how are things happening with showings, offers, and that kind of thing. And across the board, my listings and other people's listings, activity is picking up throughout the month of October so far and even at the end of September. So buyers, please take note what I said and what my son asked earlier. So onward, moving along. Guys, a little bit ditty from the Department of Finance Canada. So this is another thing. So we've got very low inflation. We've got inevitable interest rate cut this month and possibly another one coming before the end of the year. And this is another thing that, so as I've mentioned many times in these updates, you got, if those who follow regularly, you'll remember this. Whenever there's anything remotely like an election or the rumors of an election, the government starts doing stuff. Why? Because they want to catch your attention. They want to make it look like they're doing something. Sometimes it does well, sometimes it doesn't. It's not that they don't care. I don't want to say they don't care. But the fact is, as long as they got your attention, that's really all they care about. Here's something that are going to attract attention. It's going to be good for buyers. It's going to be good for the market to pick up. However, what's going to happen with house prices because of this? Well, they're going to go up, which, of course, nobody in the government wants to talk about. But here we go. So first, top of the line here. Decrease 1 million price cap for insured mortgages. Increased from 1 to 1.5 million. For those that don't know, right now, and it has been for years now, an insured mortgage, meaning a mortgage that is less than 20% down payment, with a less than 20% down payment, those mortgages are only maxing out at $1 million, or actually $999, just under $1 million. Anything past that, you have to have 20%. What they're doing now is they're increasing that from 1 million to 1.5 million. So what's going to happen, as my example at the bottom there is, your old down payment requirement was 20% for a $1.35 million home, which isn't all that much in Toronto these days, interestingly. Would have been $270,000 down payment, never mind closing costs. But with the new requirement, you have 5% for the first $500,000 and then 10% for the rest, which in this particular case, example, you're looking at $110,000. So up front, it's $160,000, which isn't nothing, I understand. However, it's a lot less than $270,000. And of course, that goes up to $1.5 million. That's a huge difference. A huge difference because, let's face it, responsible people with good income, good credit, their big hurdle a lot of times is the down payment. They have money, but they don't have $300,000 worth of money, but now they need a lot less. So that's a big deal. Look at the second paragraph there, expanding eligibility for 30-year amortizations. So again, they're making it easier to afford. 30 years versus 25, your monthly is going to be a little bit lower, which is good. And you can take steps to pay off the mortgage better anyway, but in terms of your monthly debt load, it's going to be a little bit lower, which is nice. However, what is this right here, plus the inflation being so low, plus the inevitable interest rate cuts that are coming. What do you think that's going to happen due to the market? This is in December. So what do you think is going to happen next year with the prices? Onward. So let me sum up this real quick. Oops, not sure what you needed that, but hey, not high production here, but very, very high volume in good information. Buyers, there's an ample opportunity out there. So don't get me wrong. You're not in seller territory already. No, there's lots of motivated sellers. I know them. I've seen them. I've talked to them. But listen, that magic window, it is gone. And the reason I want to mention it is not the I told you so. That's none of this. This isn't a personal thing. I want you to succeed. I want you to get something. And so just because that's gone, you should be in your mind, listen, if I miss that, I'm still in a good market. I should take advantage. Inventory remains high. Prices have held. Policies are changing. And sales are increasing. All those things that I just covered before. So again, my son's question, what do you think is going to happen in the market? Sincerely, with all that's been going on. Now, not enough of you taking advantage of the opportunity, and many of you are waiting too long. I've had 2 homebuyer webinars. The first one was first-time homebuyers specifically. That was about a month and a half ago. Good, decent turnout, lots more people. Then I had a homebuyer seminar, just regular homebuyer, because I wanted to see what would happen. And the numbers are actually significantly lower. Now, I met some people, got some appointments out of it. Fantastic for me. But I was disappointed in the lack of numbers showing up. Why? Because it is such an amazing opportunity in the market right now. But again, moving right along. Buyers, this is a repeat of last month. So next Bank of Canada announcement for me is October 23rd. If you're watching this after that, you already seen what's happening. And undoubtedly there was a rate cut, possibly 0.5, with 3 rate cuts already. And this one that inevitably happens. So 4 for those of you watching at the end of October, this video. What is going to do to the market? Since May, inventory has been at record highs. I've been saying that since the beginning of the video, with prices pretty much staying as is. It's maintaining its well past time, my beloved friends, to get into the market. If you've been thinking about it, sitting on your hands is going to do nothing for you, as you've seen with the statistics here. Now, sellers, you got to take heart. Pricing properly still continues to be very, very important. I've seen many listings not sell because the pricing isn't right. Listen, I'm not going to get through all the psychology of how buyers discuss. I do this in a listing presentation. If you're thinking of selling, have this discussion with me, because I'll tell you a few things how buyers think about price, what they think is included in the price and what isn't, depending on the kind of buyer it is, especially if they're an older buyer. If your demographic is an older buyer, they think about pricing a home differently than others do. For them, for example, the whole multiple offer thing is a weird thing and they don't even like the sound of it. But there's also pricing issues. So talk to me, give me a shout. Now, pricing important. Things are slightly picking up, so take heart and really do. Be encouraged. Don't start dropping your price too much. Don't do that. There are people out there, it will sell. Sometimes if you have competition, as many do because of the inventory, wait out a little bit. Unless you have to sell, that's life, that's fine. I'm sure you've built tons of equity anyway, good for you. But if you don't have to, hold on. I think October is going to be really busy. If nothing else, you get some more showings for sure. Make sure your realtor, if you're on the market, knows that. And if not, call me. Know your numbers. That's something I mention all the time. If you don't know your numbers, days on market, your area, days on market, where you're moving to, average price, average anything and everything. You need to know the numbers about your specific area and the area you're moving to. Very, very, very important. Sellers, I confess, okay, self-serving. This is not a time for discount lazy realtors. It isn't. You can't have bad photos in this market. Okay, I know things are picking up, but they're not at the point of 2022 where you just put it on the market, make it look pretty, and you get $300,000 over the asking or more, depending on the property. Guys, that's just not the case. You have to look good. You have to have an agent who actually works hard. Listen, because many of you are not in the business, and I say respectfully, many of you are highly more educated, much more knowledgeable, all kinds of things in life, maybe not just this specifically. Listen, you got 97% of asking in an area, that's as an example, that I sold in. And let me move through this here. So let me start over. So this case here, this is actually interesting. It was an area where not a lot of things have sold. As a matter of fact, I'm not going to mention all the details here, but 4 or 5 homes at least in the area in that same price range. It was about the mid ones, 1.5, 1.4, 1.6, 1.7. That price range, a bunch of homes actually did not sell at all. They were taken off the market. And I had a listing there, worked very hard, had amazing clients, amazing, clean, wonderful people who kept their house immaculate. Certainly helps when it comes to selling. But we worked hard, doing everything from open houses with a lot of follow-up, a lot of neighborhood work, a lot of contact with older realtors in the area. I even had a local realtor who likes to farm the area nearby, come and do an open house for me. That way we got a little more exposure. So all this extra effort, everything from door knocking to flyers, the whole bit, All this extra effort actually got us sold for a really good price. A few days after we firmed up and the price was public, or the sold was public, I got a call from a neighbor saying, "Hey, listen, we were in the market a while earlier this year. Disappointing. It seems like things were we feel like maybe not enough effort was done because it's not the best market. It wasn't then, at least. And so I'll be talking to them this weekend to see if maybe I can help them out. So the point being, guys, lazy discount realtors, this is not the time for them, guys. It just is not. You need a professional. Trust me, you're going to net more in the end anyway. Something that a lot of people think about. So homeowners, bonus. Okay, if this is not for sellers, if you're not selling, you're not buying, you're just staying put. This is just for you. I get absolutely nothing from this. So look, if you're refinancing, you can Google this. If you're refinancing or staying put and you're refinancing, homeowners are getting up to $4,100 cash incentives from different lenders, different banks especially, just to switch to their account. So if you're going to refinance, maybe get a mortgage broker, see if another bank is actually going to give you a good deal. And if they give you a good deal, switch. If it doesn't change anything for you in terms of interest rate, in terms of those kind of things, and you get $4,100. So maybe I made you $4,000. Good for you. Salute. So starting January 15th, there's new federal rules will allow Canadian homeowners to more easily build and rent out secondary suites. You knew this was inevitable. RBC already did a thing for garden homes and laneway suites. So this is going to happen. Basement apartments and laneway homes. So homeowners can refinance up to 90% of their home's value. All the details aren't here, of course. You got to check this stuff out. Or give me a shout and I'll get you the information. But this is interesting stuff. So I'll give you an example that actually is quite interesting. And of course, let me mention as well, $40,000 in low interest loans through Canada's secondary suite loan program. Just the fact that that exists tells you something about what they're trying to do with the housing market. Okay, here's an example. So you have a home for $1 million, for sake of math, okay? And you want to do a $350,000 garden suite. Quite feasible. So you're looking at applying for a $350,000 garden suite financing and refinancing. You receive financing for up to 90% of the value of the entire property. So including the new value of the garden suite. So they factor that in as well, which is pretty cool, I think. Clearly they want you to do it. So you got 1.35, give or take, times 90%, loan to value, LTV. You're at 1.2 million total, can be financed, and you pull 350 out of that. Again, we're being very strict with numbers, not extra charges and stuff. You pull $350,000 in funds from the new insured financing. And in the scenario above, as long as you got $135,000 equity in the existing house, you can finance your financing, build a garden suite with zero cash outlay. The point being, you have zero cash out. That's pretty amazing. And you get to have a garden suite, which you can rent out, use for an elderly parent, or whatever, quite frankly. Or sell it that way and sell for a much higher price. And all these can be amortized for over 30 years to decrease the monthly payments. So if you're renting it out, take it for 30 years and maybe even cash flow. Who knows? For the garden suite specifically. Never mind the house that you're living in, which is already quite a bit paid off. So that's a bit of a ditty there that I thought was amazing. So I wanted to include it here because, again, trying to give you guys valuable information. So guys, Andrew the Realtor, I talk fast. Forgive me, lots of coffee. I want to get you guys great information. The QR code over there takes you to AskAndrew.Realtor, my little experience app website. Have a look at that. A lot of information there. All my contact info is there. And guys, hit like, hit subscribe. If you're watching this on YouTube, this is great info. And I never knock people. This isn't clickbait. I give you the actual facts, not only on the ground where I am, but the facts that are coming in from the economists, from fellow business people, and fellow realtors as well. So guys, till November, have a fantastic rest of your October.